will the U.S. economy see a recession within the next year?
I could. I mean, the playbook says that gravity will occur and you will get one within, Darius, what would your timeline be on that handicapping it? I mean, I'll finish what I'm going to say, and then you can go through how you would in a meeting. And for those of you that don't know, Darius and I do most of the meetings together, and when it comes down to like specific numbers in China or the GDP model on recession specifically, Darius obviously tells me what to do. So, that's how we work. We work as a team. We don't wake up in the morning with this God-given talent that many pundits have with no research team, and they just seem to feel and know everything. So the reality is that recessions occur, and the way that I'd answer the question is that the probability is rising of U.S. recession, and the probability of a U.S. recession rises at a faster rate. Again, choosing my words very carefully because they're mathematical words coming out of my mouth. The probability rises for a U.S. recession at a faster rate if the Fed makes a policy mistake and raises interest rates. If they do not raise rates, the probability is still rising. It's just not rising at an accelerating rate. So I'll hand it back to you, Darius, on just kind of giving the timing in months on how you'd answer that question.
Yeah, absolutely. So there's a number of indicators that we look at to sort of track the likely duration and culmination of the economic cycle. One being jobless claims. That's probably the cleanest read. So on a rolling 6-month average basis, that would imply we have somewhere between 10 to 12 months more of expansion. Consumer confidence, the relationship between the intermediate term and long-term trend in consumer confidence would imply that we have somewhere around 12 to 14 months left of economic expansion. Corporate earnings, the relationship between trailing 12-month earnings and its own trend would imply that we have something less than 6 months left of economic expansion. And then the relationship between leading and lagging indicator indices would imply we actually have somewhere closer to 18 to 24 months left of economic expansion. So, the probability is certainly rising that we experience or enter a recession sometime in the second half of next year. But obviously, as Keith mentioned, if the Federal Reserve, sort of continues on this politicized path to normalize or what they consider normalized interest rate policy, that obviously heightens that probability and pulls forward, some of those things, because you're going to see more firings in the energy states and places like Texas. You're obviously going to, deflation will obviously impact corporate earnings and corporate revenue growth. So, you start to pull forward those expectations a little bit. And I would say, Keith, the biggest thing that we deal with is not necessarily will we get a recession in the second half of next year, but rather people's expectations that a recession is not going to come for 2 or 3 years. That's probably
right.
the biggest risk is just pulling forward those expectations into the marketplace.
Yeah, and expectations rule market prices. That's why this morning in the early look note, I would never answer it with like a number of months, because markets and economies don't interact that way. There's no frequency model in probability theory. A frequency model would be this has happened this many times, therefore it's going to happen this time and when the next time. That's just pure Wall Street BS gobbledygook, when people tell you that. Understanding history is very important. Understanding where you are in the cycle is uber important. But again, the pace of things, and that's why I measure volatility so I guess maniacally, is that volatility makes things happen faster, much faster. And that's why, think of a day like today. Let's say that today is the day where the Federal Reserve signals their rate hike at the September meeting. They would knock oil to 35 in a day. I mean, people who don't get, or at least I don't get anything, okay? I hope everyone knows that, but neither do you. And if the game here is just to get it before everybody else does, I'm good with that. And what I get is seeing something that's probably going to happen and setting up ahead of that on the bear side. I'm not your sugar daddy on getting to pay 300 times earnings for your favorite biotech stock, or chasing GoPro or Netflix charts in May and June. That's not me. If you want that guy, go on Twitter. You're going to find plenty of guy in his basement with a chart who can do that. But I'm telling you that once we go into this move of volatility and the Federal Reserve is messing around with raising rates into a slowdown, not me, not you, not who thinks they get it, understands what happens, because that's never happened. They've never raised interest rates into a slowdown. And this economy is slowing. It's as crystal clear as what's on the market screen today. So again, that's my extra 2 to 3 cents on that.